Well, let's go ahead and open up our grain and livestock trade here on a Monday. And I will remind you that we actually had an overnight export sale this morning before we got into our daytime session. And it was a bit of a surprise. It was 130,000 tons of hard red winter wheat sold this time to unknown destinations. Very mysterious. So anyway, we'll see if that has any impact when we get to the wheat quotes here in just a second. Let's start out with the corn. And on the corn board on the open today, we are maintaining higher trade. So this would be basically about nonstop higher trade ever since the bearish report came out on Wednesday. We have September corn now 4.5 cents higher at $3.29 per bushel. And December new crop corn now 5 higher at $3.43, almost on the high of the early morning session here. Let's turn to our soybean quotes with data provided by bar chart. We have September up 9 1/4. 906 1/4 is the last trade. We have November 9 1/2 higher at 908 1/4 per bushel. In the wheat market, well, we'll start with Chicago wheat. We have September now trading at 508 3/4. That one is up 8 3/4 cents per bushel. And here on the hard red winter wheat, where we had that overnight sale, we're only 3 1/2 higher at 428 3/4 per bushel. Go figure. Now, looking at the spring wheat market, currently you have Minneapolis September 5 higher at 502 1/2. Let's welcome Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky, and talk about our market activity here. Dewey, everything higher to start out today. Did you expect that?
Well, in a way I did here. I want to take a minute and talk about something that just really doesn't get very much attention here. If you look at what the large institutional index funds have been doing here, Marlon, since March, their long position in corn has risen about 38, not 38, but about 18%, 38% in beans and 23% in wheat. They usually start getting long commodities when they're looking for, like, say, a top in equities and so forth. And, of course, equities have been very much elevated here. So I think this is going to put a longer-term floor under the grain markets here right now. Now, what we got the markets up today is because, well, we did have that hurricane-type storm that blew through Iowa and parts of Nebraska and Illinois last week. Estimates are we may be looking at 8 to 10 million acres that have been damaged there. But the thing I want to emphasize is that you're looking at some of the big bucks are starting to come back into commodities.
Well, and I wondered about that. We talked about the fact that we had, well, for example, maybe I can bring this up here. The gold market had a big run up until about, what was it, Dewey? About a week or so ago, and then it sold off hard. It was way over $2,000 an ounce. And right now, even though we're up $31.40 an ounce on September futures, it's still at $1,970 per ounce, and it had been as low as $1,930. So, I mean, we gave up, over $100 worth, and an even bigger mover at that time was the silver market. It's higher today by $1.37 an ounce, September at $27.46. But as you mentioned, they sold off so hard after a while, it made you wonder if maybe some of the investors were looking for a place to shelter their money.
I think they are.
So what do you think about the future as we get toward harvest here when you look at the grains? I mean, do we have room for more of a rally?
You do, but it's probably going to be very limited here. We generally, both corn, soybeans, and wheat, get a little bit of a bounce in August, sometimes in early September. And the corn market, I'm showing a pattern. It could still go down and make a new low. But nevertheless, we are at the ending stage of a very long-term decline in the corn market. I think beans have put a low in here. Wheat probably has too, but corn still got some question marks here around it that probably will be resolved in the weeks ahead.
All right. Of course, we have all kinds of crop tour information coming out this week throughout the Midwest. We'll be waiting for that data as well. And we'll get an update, I believe, at the top of the hour. Also, we're going to be talking about the cattle market and hog market here momentarily. We had some big moves in cattle recently. Are they flaming out? And we'll take a look when we open up that trade in just a minute. Dewey Strickler is our guest, and he is with AgWatch Market Advisors. He's based in Franklin, Kentucky. Time to open up our livestock trade here on a Monday. We begin with live cattle, and currently on the live cattle, we are higher across the board. Moderate gains, we'll call it. August is now 22 cents higher. We're at 107.82 per hundredweight. October up 27 at 110.50, and December gaining 45 cents right now at 113.27, just a dime off of its high of the opening range. On the feeder cattle market, nearby August is down a dime at 143.82. September down just a dime at 146.47 per hundred. And you have the deferred contracts a little higher. October's up 12. November's up 25. January's up 47. Well, if you look at the lean hogs, currently on the lean hog market, October is now 55 cents higher. We're at 53.57 per hundredweight, only one tick off our high of the day. And December, 25 cents higher at 54.87. And that one is just one tick off of its high of the day as well. So let's sort these out here. On the cattle market here, first of all, this morning, Dewey, how do you feel about the overall demand structure here when it comes to the cattle market? It looks like our commercial buying for the Labor Day season is starting to run out of gas. Does that mean you could be kind of toppy in the cattle market?
Oh, like we discussed in the break here, I think we're getting a little top-heavy here right now. I do look for a little bit of a break, but in the October contract, you got a gap up here around 112, somewhere up in that area there. The pattern I'm showing is after we get a break, we probably will go up and fill that gap there. But like you said, we're getting into Labor Day. Demand's going to back off, and then I think once we fill that gap, you're going to start looking at some weakness coming to the cattle.
Now, on the feeder cattle market, it appears that, once again, we have some spread activity going on. Can you explain why?
Well, you're looking here at corn values. Corn values are rising a little bit here. That's put a little bit of pressure on the cattle. I think that's probably more of an issue in the feeders than anything else here right for the moment.
And what about on the lean hogs? Now, on the wholesale trade on the beef and the pork last week, everything seemed to be firming up last week. How are we situated right now?
Well, we had cutout values were up last week. We've been up here about 3 days here. I think we're just a little bit toppy for the moment, but I do think pork is going to continue to move on higher here. We could probably eventually see the October contract move up into about the 57, 58 area.
Just to touch once again on the Dow, the futures on September are now 35 points higher at 27,827. And the dollar index so far this morning, well, currently you have September down again, 285 points, under 93 cents at 92.800 right now. Dewey, good to talk with you. Thank you, sir. Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. Janet, we're off and running.